Hello, everybody. Welcome to Insights Fusion podcast. Today, we are diving deep into the world of B2B payments, business growth, and fintech innovation with our guest, Perryn Holtrop. Perryn is a founder and CEO of PayNation, a fintech company specializing in streamlining payment processing for manufacturers, wholesalers, SaaS companies, and B2B businesses. With a background in sales, business development, and payment security, has built a career helping businesses cut costs, optimize cash flow, and integrate seamless payment solutions. So, in this episode, we will uncover the biggest mistakes businesses make with payments and how to fix it, how to reduce transaction fees and improve cash flow, what every entrepreneur should know about payment and security compliance, lessons from scaling a fintech company and leading high performance sales team, and future of payments, AI, automation, and what's next for B2B transactions. So, whether you are startup founder, business owner, potential client curious about fintech, this conversation will give you some insights about how it all works. So, welcome, Perryn.
Thank you. That was a nice introduction there. I appreciate it. Thanks for having me.
Awesome. Thank you for joining. All right, so let's talk about what you do. So, could you tell briefly what is it you're busy with?
Yeah, so we are what we call ourselves now as an AR automation, AP automation company. When you hear the word payments, a lot of times it gets misconstrued with, retail or hospitality or just, accepting credit card. And there's a much larger business or industry around that. So a lot of what we do is working with middle market, lower middle market, B2B companies that are using some type of software or ERP solution or some type of outside software from us that we try to integrate to help accept payments and automate their AR or even their AP, accounts payable or accounts receivable. So a lot of what we do is not just providing the service to accept card. We're also consulting with ways on how to make it more friction, make it frictionless or less friction, um, eliminating double, triple entries. Companies that are growing that have multiple different softwares, try to keep them off of having to input data in multiple different software platforms, kind of do it in all one place. So a lot of what we do is really just streamlining the whole process. And then aside from that, helping clients get paid faster, right? In any kind of business, DSO, days sales outstanding, the time it takes for a supplier to get paid is a lot of times resulting in not necessarily the buyer not wanting to pay them quicker, just the necessary links or services provided by the supplier to make it easier for that buyer to pay, just because of technology or other things. So what we're doing is implementing the necessary tools for that supplier to send to their buyer or their clients to pay quicker. And then once stuff is paid, we have the issue of reconciliation or remittance detail, right? So if somebody's getting paid on an invoice or a PO or multiple invoices, how do we apply those those invoices? It's showing it in the system and easy to reconcile for the accounting team. So all of those things encompassing is part of what we do in a consultative approach, in a kind of a consultative manner for middle market businesses.
Interesting. It sounds like a lot. It's a lot what you do.
A lot. It's very, very, very complicated. There's never a magic bullet, so to speak. Every account is always different. Needs are always different. What's important to one business is not to the next. So it's never a, you know, I always joke and say, our not really joke, but more of a statement that we're kind of a hybrid between tech and sales. Obviously, in business, everybody's always selling something. Traditionally, in our industry, it's a bunch of salespeople who are just selling services, and then looked upon us as more of a vendor. We're less of a vendor, more of a partner. Every single solution for each client is always going to be different. So we got to dig in, a little bit. We got to understand what their payment flow looks like, how they're processing payments, how are they accepting, payments, how are they applying payments to, their overall, invoices or outstanding payments. So, all of these things are kind of unique sometimes to each business. So we really got to dig in to understand what their flow is, and then ultimately help with different tools that we have in the tool shed to apply the necessary fixes to whatever the pain points are.
Oh, interesting. So, got it. So you're not like a platform where you create your account, get API key, and then good luck, figure it out yourself. So you do the heavy lifting also for them.
Yes, and sometimes obviously there's so many different software platforms out there these days. As you know, it seems like every day there's a new company that solves for something, and sometimes we have a direct integration that we've built ourselves. Sometimes we have partnered with some companies that have a solution. Sometimes there's none of that. Sometimes we have to build something from scratch. If it's a large enough account or a large enough a customer that understands the value of some custom software, we'll work with some of our developers to ultimately achieve their goals. The end of the day, the goal is to make the path of getting paid quicker, how you get paid quicker, make it easier for your buyers to pay you, and to ultimately lower DSO. There's no reason to wait an extra 30 days to get paid if you can get paid today. So that's kind of our message, is really doing the necessary things to kind of remove obstacles, if you will, to making it a more seamless process in paying and receiving payments for your customers and clients.
Nice, nice. All right, interesting. Okay, so let's get back a bit to the roots, your entrepreneurial journey. And could you tell, like, what inspired you to start PayNation, and what problem did you see in the payments industry, that
Yeah,
motivated you to get started?
it's a good question. It's a question I get quite frequently. I've been in the payments industry a little over a decade. Came from a bunch of different businesses that I owned that weren't in the payment industry or in technology for that matter, but worked in kind of the B2B or manufacturing distribution space. So I had a little bit of experience there, had several businesses, different businesses over the years, got into payments, came in as just a regular sales guy, kind of worked on from the ground level, feet on the street, pulling doors, knocking on doors, just like a regular salesperson, and then slowly graduated up over the years. Eventually ended up in the enterprise side. Was working on larger accounts, enterprise types of deals, very complicated integrations and API. I always tell people I'm not a tech guy, but I know enough to be dangerous. I don't write code, but I can have a conversation about tech. So consider myself somewhat of a technologist, but I'm just more on the architectural side and just removing obstacles, like I say. So I was involved in that payments for years. And when I first got in the payments industry, I was more focused in the restaurant hospitality space because that's what seemed like everybody was doing. And became frustrated really quick knowing that my ties and my connections and my network was kind of in that B2B manufacturing distribution, space. So, I've been in payments a little over 10 years. 9 of them has been in B2B. So really quick partnered with a company that was a little bit more commensurate to the space that I was kind of working in. And then, had kind of the writing on the wall for me was maybe 2017, 2018. I realized that the industry was going more towards an integrated payments platform. A lot of software companies wanted to have payments integrated into their software. And I saw what we call integrated or embedded payments. I saw kind of the writing on the wall and realized, early on that this is where the direction of payments was headed. It wasn't until maybe a year after I had this epiphany, if you will, that I had an opportunity with a very large client who was using an ERP system at the time that nobody at the time seemed to have any type of solution for, resulting in me losing, the opportunity. And, that was kind of the last straw for me. And then in 2020, when COVID happened, I was I wasn't scared like most, let's say, and I used it as an opportunity to launch my company, and it was the best decision. We had hockey stick growth, and we were able to start working on several integrations, ultimately leading to kind of our business model now. So we do a myriad of things. Integration isn't just the only one. We have a lot of other solutions and products or services that we offer, but that was kind of the impetus. And ultimately, as things have kind of evolved in the last maybe 5, 6, 7 years, more and more companies realize that the integrated solution is kind of the way to go. It just makes things less complicated, less data entry, a little bit more easier to reconcile, kind of all the things I mentioned before. But, ultimately, you know, me losing an opportunity is what was the impetus of me saying, hey, you know what, I need to do this on my own because a lot of companies aren't doing it or doing it correctly. So I felt like it was an opportunity for me to jump on board.
How scary that opportunity was.
the, to start our own company.
Yeah,
Yeah,
to get started.
I'm less scared about stuff like that. I had my first business when I was 19 years old. I was kind of in the auto security industry, so I had been in business for myself many, many times. It wasn't my first venture. So it wasn't really scared. The other thing too is, I had a very large book of business residuals, because in this industry we get paid, reoccurring revenue, and I had a lot of clients, a book of business that I managed from in my sales days. So it wasn't like I had to start from scratch. I was able to kind of move everything over to our platform and kind of keep things nice and clean. So it wasn't like
Hmm.
I started from scratch and had zero income. I had a very large book of business that ultimately, if I wanted to, I could have retired and been happy and just managed my accounts. But I wasn't. That wasn't enough. As entrepreneurs, we always want more, right? Entrepreneur, I guess, is a synonym for greedy, I guess.
Yes, probably you could say that. So, um, how do you think? So, if you weren't a salesperson, it sounds like a barrier to get into this business is quite far. Like into any sort of business, it is, you know, quite hard to get in. For example, if you were a developer, would you see that happening?
On the developer side, I think as a developer, the barrier entry into payments is relatively easier on the developer side, only because the the need or the necessity or the demand, I should say, is very high in the payments industry. Excuse me. A lot of people are looking to build, create, make stuff work, even in an aggregation sense, right? If you're working with several different platforms and you just kind of want one kind of middleware or some kind of platform that's kind of aggregating all your solutions into one place, this is a very common need in our
Hmm.
industry. So from a developer standpoint, I think if you were a developer in this space, if you did a little bit of homework or some networking, you'd find a lot of companies like us that would possibly want your services. I think from the sales perspective, if you're getting in the payments industry as a sales in the sales aspect, it's a lot harder because typically if you're a person who maybe has worked a regular job, who got a salary, or got some type of base, typically in this industry it's commission only. So you're really leveraging your network and your people that you know. There's a lot of
Hmm.
companies out there that will offer a base or offer a salary, but then you're not getting an ongoing residual. So you're just kind of working for another payments company in a capacity like any other job. It's very hard to get leads. It's very hard to get in front of quality prospects. Um, and then you got to deal with the situation of this industry being so saturated with salespeople, because a lot of these companies will hire anybody who's willing to pick up the phone. Anybody that will make a call to a company and say, hey, who's handling your payments. So we deal with a lot of people who are inexperienced in this industry, but maybe experienced telemarketers or phone people. So when we do in fact get a referral or a quality lead, they might have talked to 20 other people that are in the payments industry. So it's very difficult sometimes to get to the point where we're operating at a baseline similarity with that prospect, not to where they have a negative opinion or negative connotation about what it is we're doing. So typically we're referred in to clients through partnerships, whether it's CPA firms or different types of other business professionals, attorneys and such, who refer us into their clients who see a need. But even that requires a lot of networking time, lunches, coffee dates, and those kinds of things. All of those things take time. So if you're coming into this industry expecting to make a bunch of money out the gate, it's not the case. So to your point or your question about the barrier to entry, you have to be willing to put in that groundwork of work, ultimately to get there. So for me, the transition from being a person who owned a book and was kind of in the sales capacity, and then starting our own firm. All businesses start with sales at some point or another, right? So it wasn't like I started this company and didn't know anything about sales or didn't know how to sell. Obviously, I know how to sell. I know the product. I have a large knowledge base on things that need to be done. So transitioning into owning our own company was a natural fit for us. But there's a lot of things out there, a lot of training out there. There's a lot of companies that will somewhat show you the ropes. I know that's a long answer to your question, but the barrier entry in this world or this payments world is not an easy one. This is probably one of the hardest things that I've done in my life in terms of getting to a point of starting operating at zero and getting to a point of some success in this industry. It wasn't easy at all, but it's definitely rewarding for sure.
Definitely. I sometimes think, so, if you're a developer, you can build it, right? But you probably won't even have time to go and sell it. So it's like very big barrier. If you're a salesperson, you can sell it, but you cannot kind of build it. But if you can sell it, you will find money to build it.
That's true, and that's really kind of our model. To be honest, is this is a very common thing, and really an insightful question, to be honest, because you have a lot of fintech companies out there that are building stuff all the time, really cool stuff. I mean, I've been on phone calls with many companies that had great product, great solve for amazing problems, but they can't sell it. They can't penetrate the industry because they don't have a sales organization. When you're a sales organization, or your primary I guess skill set is selling products, it's very easy to insert another product in that sales org. But when you're a person like me who understands tech and understands development and have kind of seen the shortcomings in the sales space, because we typically like to partner with companies. If we can partner and provide a solution ourselves without having to develop something brand new, it is a good fit. But we typically will like to build our own if we can, because we can build it how we want. But if somebody's already built something really good and it works and it's been proven, it's not necessary for us to reinvent the wheel. But because we're salespeople and I know how to sell and been in sales a long time. When an opportunity presents itself and there's a shortcoming there, I could say, hey, this is a good opportunity for us to build something here. And then understanding on the sales side what's required, but then also wearing my my technology hat to be able to say, hey, here's what we can build to make this a very easy transition and make it palatable for a salesperson to sell. Because obviously, as a salesperson, we sometimes uh, don't want to get too technical for the end user who's buying it. We want to be able to sell it in a very easy, clean way. So,
They need problem solution, not like technical
correct,
nuance how it
correct,
works.
correct. And so I think that my sales background, along with because I'm an inventor, like I own several patents, not in the payment space, but I own several patents. So I've always been a tinkerer. I always been in a position of creating something and finding a solution for a problem. In the last 10 years, or maybe the last five, in our our company's existence, been more in the technology space. And as you know, in technology, there's always something to solve for. Sometimes people build stuff that's an overkill and worse than what was existing before, but they think because it's brand new and technology that it's better. But for us, we kind of hear a lot of the complaints or the issues or the problems or the pain points that a lot of our clients have. And so when we start hearing the same pain points over and over and over again, we're like, hey, you know what? There's nobody out here that can solve for this. Let's develop something ourselves that can solve for this pain point. And that's typically how the ideas of products for us come along.
True. And own solutions has high retention rates.
For sure. For sure. So, that's a biggest thing for us that's allowed us to be successful. We have a very, very low attrition rate. When we bring clients on, we're keeping them a long term because we spend so much time with them, building, integrating or whatever. And, the retention rate is not necessarily only because they can't go anywhere else. Obviously we don't ever want to present our services or our products as in a way where you stick with us because you have no choice. Clients definitely have a
Yeah, of course.
choice, but when we bring a solution to the table that definitely solves for the pain points they've been having for a very long time, and then provide amazing service on top of that. Why would a client want to go anywhere else? And that's kind of the model that we follow.
Yeah, so it's not like necessarily like a locking in. It's a flexibility and speed that you can extend on your own solution. You can
Exactly,
just get it done much faster for them.
exactly. Exactly.
All right.
And then, you got clients, you got other companies who, we're not the only one, not the only company that's doing, that are solving for these problems, right? You got other companies that are much larger than us, who, get into a place of scalability. And instead of hiring competent people that sell their product, they bring in, sales guys that they give training to that may not necessarily be technical or maybe don't have a lot of experience in the payments industry, but they have a great platform. And now they're selling a product with a person who's really not that knowledgeable. So the experience that company experienced wasn't the greatest because even though the platform was amazing, the person that sold it to them was not because again, those companies are tech companies that aren't sales
Hmm.
background, and then a lot of that stuff falls apart as well. So we always like to say that we're a payments company that develops software rather than a software company that's trying to get into the payments industry. It's a much bigger difference.
Okay, makes sense. All right. So let's talk about what common mistakes you see other founders make when handling payments in their own business.
I think it's kind of on what we just talked about the sales aspect, right? I think that the old adage of if you build it, they'll come, as they all say here in the States. You may have heard that saying before. It's not necessarily the truth all the time, right? If you build something great and it demos well and it solves for problems and all those kinds of things, it's all great. But you still got to have somebody that can sell it, right? You got to have you got ability to sell. So I think a big mistake that a lot of people make, especially in the tech world, is they think because they have this amazing product that it's just going to fly off the shelves, so to speak, without having to do much. For every one technology or any one platform, there's 1,000 others that claim to do something similar or the same thing, even though they don't. So I think that
True.
I think that people have a tendency to underestimate the power of a sales organization. And I think that if a company is scaling and they have a great product, they should hire or bring in somebody that knows how to scale a high functioning sales organization to really train them, understand the product. But you're not trying to, like, how can I say, a sales professional is a professional nonetheless. There's people who are really good at it, and there's some people that may innately be good at sales, but they need to be trained. As opposed to just bringing anybody that can talk about your product and training them on the product and calling them a sales team is a gross mischaracterization, in my opinion. So I think if you're going to really sell a product, bring high functioning salespeople that understand the concept of sales and the sales cycle, and then teaching them your product. Because it's a lot easier to teach something to a smart person, right? If somebody's smart, it doesn't matter what it is that you're selling, they can get it. But if you're bringing someone that's new to sales, doesn't understand this, maybe came from a completely different business, but they're not afraid to make a phone call, that's good. But that doesn't, just because they're not afraid to make a phone call doesn't necessarily makes them a salesperson. So I would say that I think that sales organization or just a sales team is typically a very misoverlooked concept as scalable companies, specifically in the tech world.
True. Also, new people, they have a lot on their own plate. They need to learn how to say hi to the whoever is answering, how to propose, like how to ask questions, and then the client might say, "What's the problem?" They need to understand the problem already, like to explain and how to map the solution to that problem and all of those things. So it makes a lot of sense. All right, let's talk about now again. Let's get back probably like to you as a company, as a founder, and like relation more to the client and payments and the business strategy. And the question is, so many businesses don't optimize the payment process. I even know some that does a phone call, asks for credit card details, and enters it manually into the system and then makes charges. So, what's the number one thing companies should do to cut costs and increase efficiency?
Very first thing, as silly as it may sound, stop writing credit card numbers down on a piece of paper. You'd be surprised how many large organizations still do the rudimentary way of accepting card. To your point, entering a card number or writing a card number down. I remember a couple years ago, we went into a really large company, $1 billion company that had locations all across the country. And we went into one of their corporate offices, and we went in there, and the gal that was intaking credit was writing credit card numbers on a piece of paper, and they had a big filing cabinet where they stored all these credit card numbers. That's an absolute no-no. And as silly as it sounds, and I'm kind of tongue-in-cheeking here, but it is a real thing, and it does happen. And that was a true story. So at minimum, I would say, whatever type of system that you're currently using, even if it's on the lower, most rudimentary scale, there are things that can be implemented to eliminate or alleviate any type of data entry type process. Whether it's a link that's sent out where a customer can enter their own information, if it some type of pay now button that's linked to an email that's attached to an accounting software, QR codes. There's all kinds of different types of stuff out there. So I would say that. The other thing I would say is when you actually engage with a person that is representing a company that handles payments for you, and there's hundreds of them out there, thousands of them out there. I would say that for a larger company or even a middle market company, which typically is the case already, but not to look at that person as just a salesperson. And what I mean by that is if somebody comes and calls you and says, hey, who's doing your payments? And send me some statements, send me this, send me that, send me this. You're just falling into the trap of, the same cycle, if you will, that you've gone through many times before. And that's not the right cycle. Because a lot of times in this industry, the true savings, if that's the primary focus of what you're trying to do, doesn't come from what you're getting charged. A lot of times it comes from the process of how you're processing payments, where some of the cost is coming from. For us as a company, price is typically tertiary to the conversation. It's never our number one, goal. If we go into a business that's really hyper focused on price, typically that's not the right client for us, because we're going to, dig in deeper on some of the ways on how you process, how to eliminate, like I said, double, triple entries, eliminate maybe somebody that's data entering all these credit card numbers in that doesn't have to. That's a salaried employee that typically you can move that person somewhere else and be more efficient for your business. So, approach it, a payments company is what we say, as us being a partner. The same way that you would look or take advice from an attorney or your CPA or your business coach or your sales leader or fractional CTO like you're not coming into that business as you being a vendor. You're a partner. They're paying you for your knowledge and your expertise. And so if you have a business where 70, 80, 90, 100% of your income comes from a digital payment, it probably behooves that company or that person to bring in someone like us who's going to be a partner and an expert in the payments industry, since majority of your income is coming from a digital payment. Do not just go and find the guy whose claims can give you the best price, because we both know you get what you pay for, and it's very, very prevalent in this industry here.
And I think if the potential client is super focused only on the price, I'd see that they probably didn't identify the pain point for them. Like it's not really clarified that your solution would have an impact. So they might be, like talking about the price because they don't know what it will do for them.
Exactly. And that goes back to what we said about sales guys, right? So if you got a sales guy who's trained to say, hey, let me cut some costs, let me save you money. Look, every business wants to save money, right? We all know saving money is the holy grail of any business, right? We all want to save money. But any high functioning business or high functioning C-suite executive knows that saving money is not always the case, right? So having a salesperson that can identify those pain points, even if that prospect doesn't think they have any pain points, the right questions being asked, and say, hey, how are you guys currently taking credit cards? Oh, well, we'll write them down on a piece of paper. They might not think anything's wrong with that until you explain to them, like, hey, you can get breached. There's PCI issues. There's this, there's that. There's all kinds of security problems there. Oh, wow, I didn't understand. I didn't realize that was a problem. Well, it wasn't until we asked you that question and presented to you why that could be a potential problem, which is, okay, now let's get into the brass tacks of things. So again, salespeople, comes down to sales.
Yeah. I can imagine this like severity of storing credit card details in the closet, because I was working in London, so I was like making coffee in the kitchen in London's office to the clients, and like we were chatting. There were more people like from from the same office, and then there's a guy. I'm obviously don't know the guy. Like I'm kind of new there also. And then somebody from the office like, who's that guy? And he dropped the cup and ran away. And everybody's like, oh shit. like a guy
Wow.
sneaking around in the office and
Wow.
talking to everybody. How do you do this? How do you do that? So how does that work? Who's the boss? Who's your manager? What's the name? All of that.
Wow. Are you serious? That's crazy.
Yes, 100%.
Wow. That's wild
Yeah, and
right there. So he was
yeah.
that person was just there to try to get as much information about how the workings of that business, and no one even knew who
Yep.
he was.
Yep. And then there were other guys who were tracking when the CEO leaves. And then they were sending emails to people who, like, based on their research, I suppose, had access to payments. And it was like CEO signature, email super similar. It's like one letter change, oh, I just drove out, but and forgot to do a refund, like or like pay for the event, blah blah blah. Could you transfer like $5,000 to this account? It's like our partner. It's like
Yeah,
insane.
you know
So
what?
those guys.
Our IT company that we work with, who handles all of our IT needs, told a story about that happening with one of their CEOs, and they had to wire, I think, $500,000. It's the similar scenario that you mentioned a moment ago, and they weren't able to recover the money. They lost. It might have been more than that. I think maybe it was $1,000,000. I can't remember. Yeah, these thieves are very a lot of times smarter than the guys not they're on the good guys side. But in payments, fraud and stuff runs rampant, right? Because we're directly relate dealing with money. So there's always going to be
Mhm.
security issues, and the idea of me in the payments world working with a company that's writing my credit card information down on a piece of paper, I wouldn't do business with them. I'd go somewhere else because I've had my cards being compromised before, and it is a pain in the butt. So yeah, it's
Yeah.
it's it's not fun. So talking about security is a conversation that we have to have, just like the story that you talked about. Those kinds of things do happen.
Apparently, yeah. I couldn't. I didn't thought that happened. It seemed like a movie.
Yeah, that does sound like a movie for sure. It does for sure.
Well, but they like dig in trash, try to find names, all of that stuff. So why not? Why not like that? All right, if we touching security, okay, let's talk about security and compliance. So it's obviously critical. Uh, what any other risks that businesses should be aware of beside keeping credit card data on
Um,
paper?
Obviously data is, of course, really, really in the payments world, a lot of the security is really based around, the um, funds being diverted somewhere else. We in the payments world, we have a very extensive underwriting process that we follow. KYC laws, banking rules, and such. Which it's people always think that accepting credit card is just signing up. It's not. It's obviously there's an underwriting process. It's kind of like getting a line of credit from the bank, right? If you're a company that's doing $10,000 a month in sales, you're not going to have the ability to run $1,000,000 worth of credit card transactions. There's going to be a limit, like anything else. And so a lot of times, we have companies that are applying for services who have usurped a legitimate business, and maybe their email is off by one letter, and they know the CEO's name, and they know the company, and they have all the data, and they try to they try to set up an account as if they're that business, but they're really not that business. It happens all the time. So be very careful of who has access to your tax ID number and certain data about the business. This is why sometimes the underwriting department will ask for financials or ask for bank statements and those kinds of things because a normal criminal may not have access to that stuff. If they do, then we have a whole different problem. But it's all about information and data, right? Whether it's credit card information, business information, or the personal information, that kind of thing. We had an incident which we were able to recognize immediately a couple years ago, where a guy came in who had a company. The person that was the person that the individual that was applying for the credit card uh, service processing service was a stolen identity, and the business that he was trying to set up was also a stolen identity. And we were able to this person was very, very smart. They had a really nice website, address verification, verify, all the things that you would think were that we typically look for. But there was a small misstep. I can't remember exactly what it was, but we were able to recognize right away and decline the service. But it was definitely a fraudulent attempt to open up an account. And what these companies do is they'll open up an account, get approved for $100,000, $200,000, $300,000 worth of volume, run a bunch of transactions, get the money, and then close up shop, close up the bank account, and they walk away with this money. That very rarely happens anymore because underwriting departments and risk teams are very, very sharp. But you got to protect your data. Not just credit card, your client's credit card information, your own personal data. Make sure you're not sending tax ID numbers. Writing it down, like the same way you would protect your social security and all those other things. You want to protect your business information the same way.
Oh, it's scary. On some invoices, you have to put EIN, for
I
some
know.
services that you need to provide it. And
I know.
oh man.
I know. That's why. That's why sometimes, sending an encrypted email or there's a lot of technology out there where you can send an encrypted email where you got to go in and use a password to get in. We use a lot of that here when clients are sending us private data like financials and stuff. We send it through an encrypted email. Where they have to create a password to get in there. We don't just send it over the regular email because you never know who's able to get a hold of that. So here with us, we take security very seriously. Most of the payments folks, especially a lot of these fintech companies, do as well. But there's always that one person that doesn't think it's a problem until it happens to them, and then it's a whole different situation. So we try to, as much as possible, get clients to understand the value of security. I think most of the companies understand it. We've had one or two that didn't really think it was a problem, and then it resulted in them having an unfortunate situation or circumstance, and then they're extra. I feel like I had to sneeze. There's extra security measures that are taken. All we can do is do what we say, tell them what we're going to do. If they agree to it, they do. If they don't, then hey, that's on you. But we, as a company, will not do anything which will result in some type of security breach. If a client wants us to do something that's not our normal protocol that we feel could be a potential security breach, we won't do it. And if they refuse to, listen to us, then that's not a good fit for us as a client.
Of course, of course. All right, interesting. How about chargebacks? How to protect against that?
Chargebacks is a very complicated situation in our industry. With us, fortunately, we don't really deal with a whole lot of chargebacks because we're a B2B company. We primarily focus in the B2B space. We don't really do a lot of retail. Majority of our clients are manufacturers, distributor, wholesale, those kinds of businesses. So their clients are a reoccurring business. They're reoccurring customers. They're not new customers. As far as in the B2C world, there's things that can be done if it's a point of sale environment. Making sure you're using a terminal, making sure you're using tap to pay or EMV chip. Don't hand key credit cards onto a terminal. If you get a decline or multiple declines on a card and someone says, hey, try this card or try that card, don't do it. Don't accept credit card information or from somebody that you don't know anything about. If you have a client that's brand new to doing business with you and they're doing a large transaction and you've never done any business with them before, don't accept maybe a credit card the first time around until you do some homework on them. I would say, what I see a lot is companies that will accept a card from a customer and that customer saying, oh, this is not my card, this is my buddy's card or my mom's card or my whatever card. Stay away from that kinds of stuff. Unfortunately, the chargeback system, the way it currently works, the customer has kind of the rights before the bank does. If they call a bank and say, hey, this card, this didn't happen or whatever, they're going to assume that it's the case, and then it's up to you as the merchant to prepare the necessary document to prove that it was a legitimate transaction. So as long as that business is following the right protocol and they're processing the card the right way, if they're maybe took an authorization form to say, hey, I'm verifying that you're going to allow me to accept your credit card as a payment. There's a few different protocols that you can do to put in place to mitigate some of those. But typically you're only really seeing that problem when your majority of the cards that you're getting are from people that you've never met before. Mostly, like I said, in a B2C environment or e-commerce sites. Like I said, fortunately, we don't see a lot of it because we're in the B2B space, but there are lots of things you can do to kind of mitigate some of that chargeback problem. It's really just setting up front some fraud detections, and there's a lot of tools out there that can, if you've had fraud from a certain IP address before, a certain region of the country or the world that you've gotten some problems before, there's things that you can do in place to really nail down that being a problem. But at the end of the day too, you got a lot of companies that aren't providing the goods and services that they agreed to do.
True.
Which results in the consumer saying, hey, I didn't get what I asked for, I didn't get what I paid for, it took too long to get my product or service, which that customer is going to win every single time. So as long as the business is doing the right stuff, you're going to see less and less chargebacks. Companies that you see a lot of chargebacks are typically in industries that are in businesses where they're selling maybe some type of non-FDA approved product, like some kind of diet pill or supplement, or maybe it's some type of travel agency, or maybe it's some type of product that takes forever to get, and maybe you didn't get it, you paid for 6 months ago. You'll see it a lot in like cruises and timeshares and places like that where you don't see the product right away, or it takes a long time to receive the product or service. Customers get impatient, like, hey, where's my stuff? And then they're calling their bank like, hey, I paid this amount of money and I never got my stuff. That's why those kinds of industries become high risk, and it's harder for us to board those kinds of accounts because we're dealing with those high risk properties. But again, with B2B, very rarely an issue. So that's kind of a good thing for us.
Yeah, that's a good. I read somewhere on some forum, I think, that e-shops on Shopify, well, it doesn't really matter on what platform, but there is like a black hat method how to kind of destroy the payments processing of the e-shop, and some like evil people like does a lot of chargebacks, and when you hit the threshold of that gateway who does the processing, I think it's like 1% of all the transactions, and then you get locked out, and all your marketing keeps going, and everybody's basically
that's
bouncing.
true. You have typically when any company that has 1% or more in chargebacks, the first thing they're looking at is what you're selling. But typically, a company a payment processing company will see that beforehand. We kind of know the businesses that have a high chargeback rate. That's why those companies fall under the high risk. There's processing companies that only work with high risk companies. That's all they do because they can charge a premium for it, right? They can charge 7-8% to process payments because they know that a lot of other companies aren't going to approve them. But there's a lot of tools out there now that's kind of an overlaid product on top of the payment processing platform to recognize these types of you know fraudulent activity. And there's companies out there that will, if you have a large amount of charge, like 1, 2, 3%, whatever it is, this company will come in and they'll put some parameters in place to kind of mitigate that. So there's a lot of companies that have done that, and there's a lot of AI now. There's a lot of AI that kind of recognizes this. You have a lot of AI that's really good on recognizing potential fraudulent transactions. That's kind of really where AI is helping in the payments industry. It's really getting in front of it rather than an individual person have to look at it and say, hey, this is wrong, this is fraudulent, this is a potential chargeback, whatever. You got AI that recognizes that stuff immediately and set it up. On the other side, you have companies that do these what we call brute force attacks, where they'll do like an enumeration attack, where they'll have like thousands of credit card numbers trying to process $10 or 10 cents or $20 to see which of those cards go through. Because some of these companies will get series of cards or figure out the card sequences to be able to say, hey, which cards work. So there's people in the black market that will run these like thousands of cards in like a minute to see which cards go through. And the cards that do go through, they know that they can use that card in a black market somewhere. And so a lot of these companies will exploit these sites that don't have the necessary security in place, maybe a reCAPTCHA or some type of login password setup. It's not a guest checkout or some of these things like this. We deal with this all the time. We have clients that are adamant about having a sign up to buy something. They only want a guest checkout. But then you guest checkout, you got everybody that can do a guest checkout, and it turns into a problem. So,
those cards could be those from the paper notes.
Yeah, wherever. You never know where they could be from. It's all a vicious cycle for sure. So you never know where it's coming from. But the goal is that's kind of the cool thing about our job is we see it all. We hear it all. We see it all. New stuff that comes around all the time. We see it all the time. And sometimes these criminals are smarter than the average person, and so it takes extra smart people to think like a criminal, so to speak, to say, hey, what are they going to do, and put some stuff in place. But I would say I see a lot of software companies out there, especially leveraging AI in the security realm in payments. That's where, like I mentioned a moment ago, that's where AI is really dominating in payments, is really putting in these security pieces where this AI can recognize a fraudulent transaction or a potential enumeration attack or whatever the case may be, and putting that in place. So you got kind of like a super smart person that's looking at it, but it's not a person. It's all and then you tie in this machine learning into that too. So it's the AI is getting smarter every time it does it. So that's kind of the future of payments. That's where you're going to see a lot of stuff being more automated and really leveraging AI, because security is such an issue in payments. It's just a problem all the time.
Definitely. All right, I have 2 more questions.
Sure. I love this conversation. This is great.
Awesome. So what do you see as overhyped trend in fintech?
That is a good question. Let me think about that one for a second. We kind of talked about it earlier. You got a lot of these fintech companies that are getting, seed rounds of investment to solve for this problem. But the problem they're solving for isn't necessarily better than what exists already. Everybody always has the better mousetrap. Everybody's always, oh, we got the next great this, next great that, next great this, next great that. I think that the I don't know. That's kind of a hard question to ask. I know that integrations becomes a bit of a thing. Like everybody always says they have an integration to this or integration to that. That's the number one thing everybody wants is an integrated solution. But most of the people that say they have integrations typically don't, or they're working on it, or whatever the case is. I'll see the brand new tech companies, fintech companies, and they're like, "Yeah, we integrate into this and this and this and this and this and this." I'm like, well, how do you have all these integrations? You guys are a brand new company. You've been working on this for years before you guys made it known. They're like, no, we're this and that. So I would say that. I think the SaaS model is kind of it was a good model at the beginning. It still sometimes works, but the SaaS model I think is kind of an overblown solution. I believe in fintech because it's almost like you get what you pay for, right? You got these companies that always have this SaaS model: $99 this, $119 that, $149 this, and really cookie cutter. I don't think if you're building out a very attractive, sexy new technology that it should be fit into a SaaS model box because it cheapens the experience in my opinion. I think more consultative, boutique, white glove approaches to middle market, especially middle market businesses, and even enterprise, I think works. I think the SaaS model definitely works, obviously, for certain types of subscription model products and certain stuff. But when you got a software or technology that's really solving for something very, very complicated, I don't know if the SaaS model makes sense in that regard. And sometimes these companies, SaaS model is so cheap that you don't believe that it's going to do what it says because it's so nominal. You're like, how's it solving for all these problems and I'm only paying $49, right? So this is where a lot of these SaaS companies get involved with payments companies like us because they realize the money is not really in the SaaS fee; it's really in the payments or charging additional consultative fees on top of that, or having a software model that you can sell different modules and different types of modules. But I think if I had to answer that question uh, less with less words, I would say I think that the SaaS model is probably the thing that's overhyped in technology, in my opinion.
Interesting. I definitely didn't expect this one to be mentioned. Yeah, I can agree. You would need to find exactly that SaaS company that matches your own workflow. Unless your workflow is super simple,
Correct. And that's what
something.
I'm saying. Like most of these businesses, the workflow is never that simple. Everyone has it. If you're solving for a very common problem, like every single company that you could talk to has a calendar problem where like Calendly came out with such a simple solution. It's great, works. It's an awesome. You could charge SaaS on that all day long because you're solving for a simple problem. But if it's a very complicated problem that requires a lot of digging in, I just don't feel like a SaaS solution is the right. If it's a simple fix, yeah, SaaS all day long. No big deal. DocuSign, all of these types of solutions are great SaaS models because they solve a really simple problem. It's very cookie cutter or straightforward, I should say, not cookie cutter, but straightforward. It's an amazing product. We use it all the time. It's great. But you go into a
Mhm.
company that has a remittance problem, payment problem, accounts payable, accounts receivable problem, double, triple entries, like we're talking, all the stuff that we're talking about. It'd be impossible to do a SaaS model because it's never the same problem that we're dealing with. It'd be impossible to do a SaaS model. But
True.
companies will have these platforms and say, hey, we can fix all this and we're charging you a SaaS fee, but then they're charging you a SaaS fee and then they nickel and dime you on all these other solutions. And then, this $99 problem turns into a $1,000 a month fee because we had to add all these extra bells and whistles because it was a custom problem that we had to solve for. It wasn't a generic issue.
Yep, I had a couple clients with ERPs, so it's very dynamic, flexible platform for basically whatever you need.
Yes.
So if it's simple, it's cheap, SaaS, it's decent. But if you start building your own custom fields and custom relations, man, it gets expensive to host that SaaS cloud. It's insanely expensive.
Exactly. And that's what I'm saying. So like again, it falls into sales. Like people, I like if I go to a business or a company and they say, "Hey, we got a we got to buy one get one free tie. You buy one tie, you get one and a half. You go in there and you start seeing that the buy one get one free ties are ugly. I want a better tie. I want an Italian made tie. I'm going to go and spend money on tie. So that loss leader has worked for thousands of years in the retail environment. People do that to get you in. I don't want to feel that in the tech world. When I come to a tech company, I want a solution to my problem. I don't need you to bait me in with some rudimentary offering that you're going to charge me $49 for, when knowing that 90% of my customers don't want that solution. They want a bigger solution. So you're never really just getting that SaaS money for that particular solution because majority of the customers have bigger problems than the solution you're trying to charge me for $49. It just doesn't make sense. So like I said, that's my opinion. Somebody might hear this and disagree, but that's just my opinion. That's what I see a lot.
Yeah, I mean, all those prices are jumping like crazy. Also, remember for one client, the platform was $9.99 a month. So, like, one website plan, and the website was large. It was counting like millions of people going through. And I remember the quote was about 80K. 80,000,
Wow.
which starts with like 9.99.
I mean, you're making my point. That's what I'm saying. You know what I mean? It's like,
Yeah.
why am I wasting my time? Why are these companies wasting their time on a SaaS model, unless the SaaS model is really just like the SaaS model should be a specific need. Like you should have buckets of solutions. Like, hey, we see 100 customers, 95 of our customers have this problem. We can do this for
Mm-hmm.
$99 a month. But the other 5% of our customers have these problems. Depending on the solution, that's it. But if you have 5% of the customers have very elaborate solutions, 95% or 95% of these elaborate solutions, and only 5% have this one small problem, you shouldn't be a SaaS company selling this problem, fixing this problem for 99 when only 5% of your customer base is going to ever need that solution. But everyone thinks because I have this great software, I got this great platform, I got to do a SaaS. SaaS is not good for everybody. And I just read an article last week that said that SaaS companies and SaaS revenue is starting to dwindle because companies realize that this SaaS model sounded great, still great, but not everybody fits in that model.
I think like especially like if you fundraising and if you've done a couple of sales already, like you have some returning like clients paying, so you can make really sexy projections. So they
100%.
say you give us 5 million, we will have this fancy chart going to the
Absolutely.
moon.
Absolutely. And that comes down to a good sales team with a consultative approach and giving somebody a white glove treatment. People say white glove treatment or custom this, custom that, but they're not doing that. To your point, if I learned and talked a little bit more about what you need, what the pain points are, blah, 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 I can come, hey, what are your projections? Here's what we can do for this. This is what you're going to see at this amount of volume. These are kind of the issues you're going to have. You're going to have security problems. You're going to have this. You're going to have this. This is what an all-encompassing solution would look like for your specific business. This is what it costs. And then from there, if you need to negotiate price from there, you can. But trying to lump all that into a $99 solution, knowing that we're going to have 100% more upgrades and upsells to where it's going to be an expensive proposition, and it doesn't make sense.
Mm-hmm.
It doesn't make sense. So
True.
like I said, that I get frustrated all the time. I bump into companies all the time, and they have this great product, and I'm like, is this a SaaS solution? Or like, yeah, and the whole time on the meeting, they're like, yeah, custom this, custom that, and case by case, and blah 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 blah. It's like, well, that's the antithesis of SaaS solution. That's complete opposite. That's not what we're talking
Mm-hmm.
about here. So, and I don't want to belabor the point, but that's what I see a lot of times in the tech world. People
Makes
are
sense. Makes sense.
overusing SaaS.
All right, and the final question for me, uh, what? So if you had to restart or like start now building a fintech company or like white glove boutique fintech company with your own product plus consult, something like this, you have now, what would you do differently?
Assuming I had all the money in the world, and I can do what I need to do from the gate, I think I would probably um, have a software, build a platform specifically to one or two verticals, rather than trying to have a company and then make it fit into the vertical. Obviously, we have built technology that fits in verticals now, but we had to evolve to that. So if I was to start over today and I had the money I needed, investors or whatever it is that I needed, and was able to do it, I would find a specific vertical, probably, or specific industry. Maybe, you know, if it's in the B2B industry, and focus on one or two verticals within that industry, distributor, wholesale, let's say an example, kind of where we live there. And I would find all of the pain points and build a platform specific to that. So that way, when you're talking to a prospect and we're talking about solutions, you're talking about a solution and a product that is specifically for that industry. The people selling it understand that industry. Maybe the salespeople come from that industry so they can speak the same language. I think that would be a much more better approach. I know there's a lot of companies that claim they do this, but it's typically a lot of data scientists or data engineers that look at the overall overarching theme in a business and say, hey, what are all the industries? Which are the ones that have the most shortcomings? Let's build software for that particular industry. But the people that are building that software know nothing about that industry. They just know there's a hole there. So I would build maybe a software or build some technology around a specific industry that I know a lot about. I don't know if that is realistic or if that even answers your question. I think we've done a good enough job. I think too that that's a little bit of a tough question as well, because we all know we've all started businesses thinking we had a certain ideology or a certain trajectory of that business, and then we evolve. Businesses evolve, and especially in the tech world, I mean, every single day there's a new company selling something. So it's such an evolving company, such an evolving industry all the time. The tech world, what we think is revolutionary today is old tomorrow, right? Because there's always somebody that's revisiting. But I think overall in the payments, and I say this all the time, people that I see that are successful in this industry are people that focus on a specific vertical. When we bring in our sales team and we bring in certain people that we want to bring in, and sometimes the questions to some of these sales guys are like, hey, what are some of the things that I can do to achieve success? To your earlier question about the barrier of entry in this space, is focusing on an industry you do very well at. So, for instance, if you came from the limousine business and you were around limousines and maybe your couriers of cars or whatever, and you're just around that industry, transportation or whatever it works, and you got into the payments industry, it would behoove you to do everything you can to add payments to an industry that you already have knowledge about and had success in before. Rather than you being in a limo business and all the limo softwares and all the other software out there, and you got into payments and now you're out there selling, forklifts. You don't know anything about forklifts. You know about transportation. So I think,
But that's a very good point.
yeah. So I think, the thing about payments world is nobody picks this industry. It picks us. We don't grow up and say, hey, when I grow up, I want to be in the payments industry. It doesn't work that way. We go somewhere, we do something. You got into tech, you got here, you did that, you're introduced into the payments world. On the sales side, there's people that enter into this space because it can be very lucrative, and it's not for everybody. But if you do get in it, you know, find the industries that you have a good knowledge of, and that's what I did when I got into payments. I started off selling restaurants and hospitality because that's what everybody was doing, but that's not where my expertise was. I had a lot of a network with manufacturers and distributors because I had some patented products that I was selling in that space. So I had a network there. I kind of understood how ERPs work. I knew what ERP meant. Some people don't even know what ERP means. And so what a CRM was, and what accounts payable looks like, what term is, what DSO means, the basic knowledge of those businesses. So when I go into those businesses, I can speak that language. I know how to talk to a controller or to a CFO. So I think that whether it's building a software or getting in an industry or getting in any kind of new business that's in sales related or tech solution revolving around a certain industry or vertical, I think it makes sense for that person to get into something that they have some experience from already. Because everybody, to my point a minute ago, is everybody came from somewhere. No one started in payments. They started somewhere else. So, you're a CTO guy, you do a lot of development, a lot of stuff. You probably got involved in payments because you were involved in some kind of building of some type of software or implementation of some type of technology where payments became a conversation. So you have a little bit of knowledge about it, maybe a lot of knowledge, not because you went out and seeked it out. You have it because your customer was like, hey, this is a problem we have. We need to figure this out. And that's how you got involved in it. So now if you got involved in payments, if you said, hey, I want to get into payments industry, you're going to probably work on technology companies that want to integrate payments on their platform because that's kind of the industry you come from. That would make sense as a natural trajectory for you because you're already in that space already.
So it's probably a good lesson to everybody who's listening. You need to look around and see where you are now and what are you like working on and what are your strengths. Because if you deviate and jump to completely different industry where you don't have any idea how it works, you don't know anybody, might be really, really hard and complicated. And your example with if you're in a limo business and you switch to payments, like make sure that your limo business is like nailed with payments. Like
Yeah,
it's
exactly. I mean,
really
and I'm not saying you can't jump industries. People do it all the time, right? I'm not saying you can't be successful. But when you're entering in an industry with a high with a high barrier entry, to your earlier point, why not make that to your advantage? If I don't know anything, I remember when I first got into payments, a guy that I was working with who was kind of training me a little bit came from the restaurant space. His family owned restaurants. He had his grandparents owned restaurants. He came from a long lineage of people that owned restaurants. So he could go into these to these owners and talk that language of restaurants that I had no clue about. I had to learn it, and I did learn it, and I did well there for the short time I did it until I got involved more in B2B side of things. But the way that he spoke to those owners was something that I would never be able to do because I never owned a restaurant before, right? So when we're talking, and when you're talking to a business owner of anything, this applies to anything in life. When you're talking to a colleague or somebody that you respect, like, hey man, this person really understands my business, you're going to be willing to listen to their suggestions a little bit more. And as a salesperson, it makes your job a little bit easier. If I imagine you bought a car before or any kind of large purchase before, and you talk to a guy that's just a sales guy or a guy that really knows this car. He knows what button does what. He knows the engine size. He knows the cubic inches of the engine. He knows the horsepower. He knows what kind of transmission it is. He knows the 0 to 60. Like, oh wow, this guy really knows it. And if not, at least he's done his homework. You're gonna always be willing to buy something from a guy like that or gal like that over somebody that just knows how to talk well. Lastly, I'll say is I have a conversation that I have with my salespeople all the time, and people that I talk it over with my kids. The difference between talent and skill. Talent is you're born with. Skill requires time and development and hours perfecting your craft. And I apply that to sales, right? You can be a person that's a really good talker. You really know how to put words together. You sounds good when you talk. But a salesperson requires skill, learning how to master taking objections and having an answer for objections and all those kinds of things. I was a really good talker. I was okay salesperson because I knew how to talk. But it wasn't until I honed in on my craft and understand that sales is a science, just like anything else, then you apply your talent to that skill, right? So talent and skill is used interchangeably. People use the word talent when it's skill. People use skill and talent. A talented person can have no skill. A skilled person can have no talent. But if you have talent and you turn it into skill, that's a match made in heaven. And that's what people need to understand on the sales side is there is a skill set to sales. There is a skill set to tech. And just because I'm good at tech doesn't mean I'm good at sales. And just because I'm good at sales and understand tech doesn't mean I know I could be a good technologist. Those things are not mutually exclusive. So to the point of getting into the type of business, if I'm going to sell payments as an example or any other business, I'd much rather get into an industry that I have a little bit of knowledge from because my talent and skill is going to translate well because I'm going to be able to have a conversation with someone that says, hey, this guy knows what he's talking about.
Interesting. Very interesting. A lot of good stuff I heard and learned.
Yeah, good.
Very good.
That's the purpose of these, right?
Yes, exactly. And for the audience and for myself, it's kind of nice. All right, so for the closing remarks, is there anything you would like to tell the audience? Maybe how they can find you, when they could, call you, something else?
Everything, our website is PayNation.us. We're on all social media platforms, PayNation US on everything. Our website is there. Type in PayNation, it'll pop up. But we're on LinkedIn. You can look at LinkedIn. We're there as well. Everything has the same handle. You can communicate with us that way. If you follow us on our LinkedIn, we do have a newsletter that talks about B2B payments that comes out every month or twice a week actually. So you can subscribe to that. You can follow us, like I said, on LinkedIn on our company profile page. We have stuff that we post there every other day. So we constantly have information that's disseminated out. A lot of the stuff we've talked about today and more. Something we didn't get into was crypto in the B2B space, which is going to be a little bit more prevalent. A lot of stuff like that with our new administration here in the U.S., where it seems like they're a little bit more excited about crypto than some of our past administrations. So these are the things that we talk about all the time. So follow us, and happy to share what we know.
Awesome. I will put the links in descriptions on all the platforms where this goes. It was really a pleasure and really nice conversation. And for those who are listening or watching, thanks for tuning in. It's your host, Vygandas Pliasas. Subscribe, and we'll meet you in another episode with some really smart other person to learn something else. All right, take care.
Thank you.